Welcome, everyone. Good morning, or good afternoon, or good evening. We don't know from where you hail. Thanks so much for joining us. A special welcome, as always, to our members and our CFCS certified professionals who are tuning in with us today. We have 400 or so professionals who registered. We got countries represented from all over the globe today, ladies, so no pressure, right? It highlights how important our topic is today, aligning the compliance spend with economic realities, what you do need to know, what you need to do now. For those of us who have been in the financial crime compliance industry, we hear regularly about the costs of financial crime. However, we hear it in terms of financial crime against a customer or financial crime against a particular institution or a particular government in general. But as the famous international man of mystery, Austin Powers, once said, well, what does it all mean, Basil? And that is my attempt at a British accent. Apologies. Our sponsor today, LexisNexis, will be reviewing some key findings they've uncovered by asking these types of questions to multiple U.S. and Canadian firms about what you can do right now. But before we get into all of that, I got to do the boring stuff, folks. I got to tell you how to troubleshoot so you don't worry about missing any problems, any content. If you have problems, audio-visual issues, go ahead and refresh your browser first. Close out all the other browser tabs and applications, then rejoin the presentation. Also, make sure that you're on Chrome or Firefox. That's going to be your win every single time. If you happen to have music playing on in the background right now, guess what I'm going to say? Refresh your browser. If you have problems in lag time, refresh your browser. Anything and everything you can do is refresh your browser or log out and then log back in. All right. The logistics of today's webinar. Your certificate of completion is available to all webinar attendees, which is good. We used to have members only. The recording and slides are available to members, though, within 3 business days. The post-webinar survey, that's really important. We do read those after every webinar. Please complete at the end of this presentation. Let us know how we're doing. Let us know how we did. Let us know what you want to see more of in the future. Last but not least, Q&A. It's how we interact with you. It's how we know that you're engaged and you're there. Type the questions into wherever the box is on your dashboard. Go ahead and write whatever you'd like to say. Comment to any of our speakers. Questions are very, very appreciated. All right, we're going to meet our speakers now, finally. Before that, I'm going to introduce myself. Who am I? Why am I even here? I'm Erin O'Loughlin, Senior Director of Training for the Association and moderator for today's session. We have our speakers, Leslie Bailey, Vice President, Financial Crime Compliance and Payments of LexisNexis Risk Solutions, and Cindy Printer, Director of Market Planning, Financial Crimes Compliance and Payments, LexisNexis Risk Solutions. You can tell the audience about yourself, or let's get right on into the content. What do we have content about here, ladies? We've got LexisNexis True Cost of Financial Crime. Tell us more about that, Leslie.
Yeah, so Erin, thanks so much for having us today. We're excited to have everybody with us. And I'll just interject that LexisNexis Risk Solutions is a global risk company. And so we know that the focus of the conversation today is the US and Canada. We also are aware that we have a variety of attendees from across the globe. So just so you know, we're going to be driving this from the perspective of US and Canada, but LexisNexis Risk Solutions produces a financial cost of crime compliance for Latin America, for Asia Pacific, and for EMEA that outlines same questions, similar methodology. And so just to speak to that, you know, the highlights of what we're going to talk today are what's driving things, how are people spending their money, what is the impact, and where are the opportunities across the board. Now, interestingly enough, as it relates to the various regions, the results are pretty consistent. So we're going to talk just a bit about the methodology that we used in our survey to kind of walk through this. So we looked at 150 completions across the US and Canada from May to June of 2022. And so we were looking at financial crime decision makers, those who oversee remediation efforts, those who look at sanctions monitoring, compliance operations, and we looked specifically at firms we considered small assets of less than 10 billion of total assets, and then the mid to large having 10 billion plus. We're going to talk to you all today in US dollars and cents. So just want you to have that awareness. For those of you who have read the report, you will know that we've taken the perspective of having both macro and micro views to be as informative as possible. So Cindy and I are going to walk you through the highlights. As Erin said, please interact with us so much through the chat. We'll try to see what's going on along the way and incorporate comments and questions into it. If for some reason we miss something significant, Erin's going to help guide us through the questions at the end of the presentation. So without further ado, Cindy, I am going to turn it over to you.
Great. Thank you. Thank you. Yeah, as Leslie mentioned, this is focused on US and Canada. We do have other reports for the various regions, so encourage you to access the website or reach out to either one of us afterward, and we'd be happy to get the other regional reports to you, knowing that almost half of our audience today is from outside the US and Canada. So we encourage you to do that. So we're going to go ahead and, as we work through this, we are going to dig into these key findings, but just to highlight them on this initial slide here, from all of the data, we came up with 4 key findings. And the first 2 findings themselves are focused a little bit more on the drivers for this increase in costs. One being this increase in digital transactions, really knowing that we're in this digital environment these days, and the increase of cost resulting from the need to answer to this digital world that we live in. The second driver focuses more on the increase from changes in sanctions, new regulations, and those changes to your compliance programs that need to be put in place to address those. The third driver itself focuses on some financial crime, while not necessarily new types of financial crime, ones that are becoming more prevalent, that in the last, through the pandemic and post-pandemic, have really heightened themselves, but they're the more challenging ones to address as well. And then the last finding is really a means of consolidating all of the data. So how are these findings and any of the other data that we collected impacting productivity in your firms and your peers' firms? How is that impacting productivity? Why don't we go ahead and just start digging into finding number 1, Leslie?
Yeah, 100%. Thanks, Cindy. So as we look at that first key finding, the cost of financial crime continuing to increase over pre-pandemic levels, what we've actually seen is the annual cost of compliance, particularly in U.S. financial institutions, spiked. It spiked at the onset of the pandemic. I think all of us have an appreciation for the fact that behaviors changed. And so there was a complete shift in how people were doing business. We really saw a dramatic increase. You had a lot of activity coupled with enhanced due diligence around PPP lending and things like that. So although it spiked at the onset of the pandemic, it now appears to be leveling off. It is still significantly higher. So the total cost of financial crime in North America for 2022 was $56.7 billion, which was up almost 14% from 2021. And that really represents in large part the mid to large firms' cost of compliance. So still significant. We're going to talk a little bit more about that as we navigate through the conversation. So if we want to move on, Cindy, and talk about kind of what comes next, labor cost represents the majority of that spend. Now, interestingly enough, the distribution of compliance cost among financial firms trending upward of technology since the beginning of the pandemic. Initial reactions focused on labor. So that current driver of cost is investing in new technology to address the higher geopolitical risk and the demand for faster payments. Now, I want to pause right there for a minute. And for those of us who have been living through the changes in the compliance environment over the past several months, a couple of points to make there. When we looked at the same survey last year, what we found is those firms, those financial institutions who were already going through digital transformation, who were already investing in technology, saw less impact. Enter geopolitical issues and a changing global regulatory environment, and looking at the care and concern that we've had as something like trade behavior shifted. It requires enhanced due diligence. Those, it requires more labor costs. I think, we get into this, but investing in data and tools as well in the ever evolving landscape of criminal threats continues to, across the globe, really drive what we're seeing. Having just come from Sibos last week in Amsterdam, I think on the global level, this is what everyone was saying. Labor cost is continuing to drive. We're going to get there a little later on. But how you layer technology is also meaningful. So LexisNexis Solutions obviously offers a good bit of risk management support to help solve customer problems. But what we also want to help do is help our customers think through how they leverage the technology that they have and data in a very meaningful way. I think the result of this, and Cindy and I said we were going to approach this as very much the dialogue that we have as we talk about strategy in this space. The trends that we are seeing that are helping speak to this and address the customer problems speak directly to more and more organizations looking at platform solutions and orchestration delivery solutions where you can have a host of information all in one. You can leverage the same data. You can have your risk scoring, you can have your orchestration platform, and you can pull in vendors from an app store in a single solution. It's thinking smartly about how we leverage the technology that we have at our fingertips that ultimately helps us improve and reduce the cost overall. So although we do see an increase in year-over-year spend, I think we're seeing it normalize a bit from what it was pre-pandemic, and hopefully thinking about it in a very strategic way with business partners will help to further reduce the cost overall.
Leslie, those are all great points. Might also add the technology, and to your point, you said it brings various pieces of data and various platforms together. This need and understanding that firms now need a long-term solution in play for many of these, what was like an initial reaction when there were so many changes, right, in regulations and in drivers. So now the understanding being, well, we want something long-term in place, and that's where that technology really aids. That's what's scalable, and that's where those cost efficiencies come in, both from an operational efficiency perspective. You're reducing human error, and manual labor, quite frankly, is very expensive. But technology, while costs something up front, really, as that gets used over years, ends up becoming less expensive than human labor because of the operational efficiencies.
Yeah, I think, Cindy, you make a great point. And to further underscore something that I didn't really articulate in the most ideal way. I think we're seeing the pivot from point solutions to more holistic solutions. And I think I've heard the terminology holistic solution, holistic compliance solution used for the past several years that I've been closely engaged in the industry. And I don't think that has really taken off until the past couple of years. And like I said, that transition away from point solutions and how the data and technology that organizations have already at their fingertips is often available for them to use in a different way, and certainly to help create efficiencies. So
that's right. I get it.
Yeah. So as we transition to our key finding number 2, the sanctions and regulatory requirements are really pushing the need for real-time access to data insights. I'll say this, when we talk about real-time access to data insight, it always makes me a little bit nervous. I would venture to say more oftentimes than not, it is a near real-time action. Again, going back to the technology, when you have a single platform and you're leveraging all the different pieces and parts, you can think about everything that you want to interject into a decisioning, into a risk assessment in that split second, how you waterfall the information you have to produce your results. And I think that's really, really powerful. When we talk about geopolitical events, think about the recent sanctions related to the war in Ukraine, the heightened need for extra due diligence in transactions. And if we just take a step back and think about this past year, in the first half of this past year, 55 list updates, sanctions related updates, thousands of names. You have the risks that impact financial crime, like the war in Ukraine, like sanctions against Russian entities, 55 versus 35 last year in the first half. Tensions between the U.S. and Canada, the U.S. and China, not the U.S. and Canada, the U.S. and China, that will impact our businesses significantly as they continue to evolve. When you think about how much trade comes out of China and what that means in terms of additional due diligence, trade sanctions, and then still dealing with the impact of COVID, candidly. So, we're looking at export controls, trade restrictions, prohibitions, virtual assets, expanded regulatory coverage of virtual assets that enable sanctions evasion. All of those things really are contributing in so many ways to the need to leverage the data and leverage it in that real near time to near time way. Cindy, additional thoughts you may have there around, I know you spend a good bit of time in the payment space. I think as we look globally at payments and the speed that happens as well, and what it means to verify and validate sanctions, you might have some additional thoughts.
Well, that's it. It's as these sanctions are imposed, it highlights the risks that come along with digital transactions and digital payments. It's much more difficult to identify who you're doing business with when your business is being conducted digitally. Well, that aspect of isn't new. The fact now that sanctions are changing at such a fast rate means your business has to adjust to that at just a fast rate, right? Just as quickly. And that's something new that everyone is facing. While the pandemic imposed some new challenges, the rate of change wasn't so drastic. Now it's really that rate of change, Leslie, that you highlighted that come along with import-export controls and all the various sanctions having to do with this with the war, and they're not slowing down right now. So that it's that, digital aspect that really brings in the difficulty and the challenge.
Yep. So I think for our friends, as we transition to sort of speaking to this next slide that we have, the Anti-Money Laundering Act of 2020, it's interesting as we look at global business, how trends often move to the U.S. last in so many ways. So as we follow regulation around the world, we've watched colleagues in Asia move through, guidance and recent regulation around digitization, just a far more digital community than even us. When you look at how they've reduced the use of cash, and then you move throughout Europe and you look at the 4th, 5th, 6th AML directives, and then look at the U.S., the AML Act of 2020 was probably the most significant reform to the anti-money laundering laws that we've had in the U.S. since the Patriot Act in 2001. Yeah. And so really designed to modernize the AML infrastructure and allow for, or address at least, new and emerging technologies and methodologies. So it has taken us a while to start to see movement from the AML Act of 2020, and we're getting there. So I think for a large number of you on the line today, focusing on key provisions around UBO, ultimate beneficial ownership, and the complexities associated with that. Seeing movement on establishing beneficial ownership database that requires companies to report information. So still a lot of traction there. And it's complex. It's complex to keep it current. I think we're all challenged in the industry to think about the gaps in the process and where, I say this all the time, criminals are kind of like water. They go to the path of least resistance oftentimes. So they're going to find the hole. And I think that's, as compliance professionals, what folks have to think of. And I think that then is tied to the investment that they make. Expanded law enforcement, subpoena powers also part of that, as well as the increased BSA penalties. So for those compliance officers out there, I was sitting at a table with several of them Friday evening, is a huge responsibility, and one not for the faint of heart, to be that compliance officer at financial institutions and taking personal responsibility. The expansiveness of now including arts and antiquities, and then whistleblower rewards and protections. So all of that kind of ultimately supporting what is the AML Act of 2020, and just so much going on there. As of Cindy, it's September 29th, 2022, we have FinCEN issuing the final rules, right, around beneficial ownership. Yeah. So much going on from a regulatory perspective. Yeah. And this, I think, also ties to labor cost that we see, because you have individuals within these institutions who are tasked for keeping up with this, making the recommendations, and then having organizations, having institutions, regardless of where you are across the globe. Again, although we're focusing on the US and Canada here, but being able to respond to that quickly through tools, through modified processes, so forth and so on.
And that's it, Leslie. It's, if we think about what we've chatted about so far in these initial findings, it's really tying it all together, right? It's saying, here are drivers impacting your financial crime compliance program, and ultimately creating change, the need for change, And with that comes, change doesn't come free, it usually comes with a cost. But if we bring back to the labor conversation, the technology findings, it's really proving out that what your peers are doing, right? There are changes, there are drivers of regulations and new sanctions, but firms are responding by adjusting with the technology, successfully adjusting with technology and finding that right balance of labor. And really, I think, ultimately thinking maybe smarter and a little bit more diligently than, or with more vigilance, I should say, than in the past. It's like not everyone, but there's that perspective of let me do let me just do enough. That's, I think these findings show that's not the way firms are thinking about it now, with adjusting with technology and labor and being more responsive and timely. The perspective is different, and these are all of the reasons why with these particular drivers.
Yep, 100%. I think this is an area where you spend a lot of time, and that is talking about the operations and digital and crypto and how we have this ever-evolving risk in the digital world that's impacting how we do business. So you may want to just talk a little bit more about the impacts on financial institutions, correspondent relationships, crypto, all of those things. And really, I know we sound like a little bit of a broken record, but it's consistent in terms of the messaging and the responses that we're seeing across the board.
Well, it is. It's we do keep mentioning it, but it's the reality today. It is the environment that we're all operating in, this digital environment. So therefore, with those come the risks. But as we continue to get more deeply embedded with literally just doing everything digitally, the folks committing the crimes get smarter about how they're committing those as well. So it's really important not to lose sight of the fact that as we continue to evolve solutions and how we approach fighting these, the fraudsters, I suppose, get a little bit smarter as well. So this comes an opportunity for us and for firms to look at, what do I have at my fingertips in order to respond to this? What else can I be doing to fight off the cryptocurrency fraud or the digital transaction fraud? So when we get into using some of those other tools, I suppose.
Yeah, and to that end, I think we've seen regulation just over the past few months increase in terms of fines for IP address, or when you look at IP address from sanctioned jurisdictions becoming more important. Technology can help identify location-based sanction risk and digital identity from a sanctioned country. And I think this notion of digital identity is also going to become really important as we look at how firms want to look at how do I become more efficient over time? How do I leverage my technology in a meaningful way as payments, as transactions have shifted to digital? There's so much information that is held on a device, on a laptop, on a tablet, being able to look at digital networks, looking at being able to look at where somebody's logging in from and what is their behavior. Is that really somebody's true identity? Can I combine the physical and the digital information together to really validate who someone is? So super important. And I just, we would be remiss if we didn't speak to sort of the evolution of of identity and what impact that's having also on financial institutions.
Yep. No, it's a perfect segue, Leslie, into the key finding number 3, which is really all around that digital identity verification, the challenges that come with it. And so as you even mentioned, I think VPNs and Tor browsers, those are really cheap and easy to get a hold of these days. So more and more folks use them for their own protection, but it's also those individuals that are committing the financial crimes themselves. And the need and the use of them was driven up as a result of some of the sanctions that we've been mentioning in these bans and various controls that have been put in place since the beginning of the war. But it's very real that the access to them is easy. They're getting used more vastly, and the ability to identify who's on the other end of that is challenging. But to your point, there are solutions out there that can make sense of a business's digital footprint. So if you think about your business's website and conducting transactions on there, any traffic you have in and out of the website, any type of transaction being conducted on that website, you should be using that. There are new rules and findings coming out from the regulatory boards that if a business has that type of data on hand, and you have it whether you know it or not, if you have a website, there's any type of traffic coming into your website, that is information that you are meant to be using now, and tying that back to any type of identity pieces of data that you have, and using that to strengthen that identification.
Yeah, so one of the things I think is so important for us to look at on this slide in particular is the increase in payments made on a device. Now, Cindy and I are both old enough to remember when people used to write out a check for every payment.
Yeah.
And I know, I'll just put it out there. I don't think anyone's shocked by that. But in truth, let's just think about how much our behaviors have changed. I mean, Cindy, you and I did a presentation where we talked about the evolution of payments and just disruptors from, the late 90s when we looked at the inception of PayPal and the adoption of how long it took to even get into the, mid 20 teens in terms of acceptance of digital wallets. And then, little by little, even electronic banking, folks. I mean, it took people a while to warm up, and that's why it was such a sticky product within financial institutions. And then the acceleration over the past several years around alternative methods of payments and e-commerce in particular has really just kind of underscored, I think, for Canada, what we see is digital payments, trade-based money laundering schemes. The U.S. is all over the map, which kind of speaks to broad financial crimes that we're facing on a regular basis. But we can't escape the digital world right now. Good old-fashioned pen and paper, stroking the check. I mean, I think last year we saw businesses decrease significantly their check usage, which was the first time that we had seen that in a really long time. So again, just the opportunity for awareness here, and really in black and white, or in this case, aqua and, royal blue, the impact, the significant impact of digital across the globe.
Yeah, and the trend, Leslie, with that is to use the information that a business has around those digital payments and link that, find a technology, because they're out there, that links that with the other digital footprints that you have from your customer. Again, that just even that traffic on your website, not so money being exchanged in that particular example, you link that with a payment transaction to identify whether that's the same person. Is it the person they say they are? Or by the way, is someone claiming to be Cindy Brenner, and the reality is because I have the technology to link that with the other digital footprints that I've been retaining and consolidating for my business, I can now make the fact and prove that that person is fraudulently claiming to be someone else. And you can stop, then you're stopping those folks from getting into your business and processing that transaction before it happens.
Yep, 100%. And then all of that on individuals that we talked about, but we have equally some challenges around UBOs, ultimate beneficial ownership, and KYC. I mean, look, the lag in information, which is why I think ultimately the notion of this database is so attractive. But I mean, as we look at this clearly, the numbers are very tight in terms of challenges that financial institutions are reporting. But it boils down to, I think, how do I get the right information? All of the top 4 or 5 challenges here really kind of tightly coupled together. UBO has been something we've been talking about in the industry now for several years. Yeah. And the reality is firms continue to struggle with this. So clear indication to someone like LexisNexis Risk Solutions that we have opportunities to help support, promote better data around that because it's clearly driving customer need. So yeah, absolutely. Cindy, you may have some additional thoughts on that as well.
Yeah, it's maybe more of a, if we leave you with any thought around this particular finding, it's think bigger, broader than your more traditional or the ways you have been making an identity match in the past. It's use that digital information that you have that you might not have thought about, that you have that traffic coming in and out of your website, right? And that digital payment transaction information to help you better identify perform your KYC processes, essentially.
Yeah. And then that kind of brings us kind of to the culminating point, right? Our last key finding that kind of ties it all together. And it's the so what. All of these are increasing exposure. They are contributing to the productivity challenges, efficiency challenges that we're seeing today. Increased exposure is sort of driving all of this, right?
Yep. It's really, if you think about the title of this today being, here are the challenges you're facing, but here's what you can be doing today to start to combat those and get yourself in a position where you've got, an effective program in place. Not everything has to be a giant leap. There are things that can be done today. And I think, Leslie, this is where this particular finding says there are some automated and very attainable solutions that can be put in place to help you fight all of these challenges and address all the challenges to your firm.
Yeah, so I think this one in particular, this, sort of highlights, this slide in particular highlights the difference between the U.S. and Canada in many ways. Canada has recently passed the Proceeds of Crime and Terrorist Financing regulations, and so that requires the increased customer identification efforts and record-keeping requirements, particularly for large transactions, electronic funds transfers, casino disbursements, like all those industries that we would anticipate would be challenging, whereas Um, the U.S. is likely challenged by other segments of regulatory reporting. PEPs come up for us as an organization at LexisNexis Risk Solutions in terms of the information, the data that we provide. And I'll say when we talk to customers, it's one of the more challenging conversations I think organizations have, because certainly there is regulatory guidance. There isn't a common definition of PEP. So when we think about PEPs, it's very easy to identify if someone's a family member. How do I identify if someone is a close associate and for how long? So I think, we actively are all looking at ways to make that easier for our customers and also to influence some of the guidance that is being put forward as well. So again, we just see those things that we encounter as we talk to our customers really evidence itself through the survey results and what we have here.
And it's an opportunity for firms not paying much attention to PEPs, hear what your peers are doing, and it's an opportunity to reevaluate the risk that PEPs can pose to your business and reassess whether you should be paying some more attention to them and have a tighter process in place around identifying them and evaluating the risk that it brings to the business.
Yep. I think when we talk to customers, they tell us the same thing. And, we executed this survey as we do every year to look at the year-over-year changes, but we didn't identify as LexisNexis Risk Solutions because we didn't want any bias entered into the survey results. This isn't at all surprising. Negative impact on productivity, particularly as it looks to sanction screening. This is not at all surprising. We've sat in the room with financial institutions, with many of you, candidly, who said to us, I've got to get rid of that level 1 alert so that, we can have people who are more advanced, more sophisticated in terms of their investigative process, doing the enhanced due diligence. And in so many ways, I think it also makes for a more fulfilling job for those folks in an industry right now where we have people quietly quitting or we have gone through the great resignation. We want engaged employees. We want people who are fighting the good fight and doing the right level of investigation. But this points to how significant sanction screening, for example, financial crime compliance in general impacts productivity. And the fact of the matter is, that productivity is worth dollars and cents. So sort of bringing it home, Cindy, if you want to kind of walk through this.
Sure. Because the point you were making, Leslie, and this, the points also on this slide really highlight the areas also for the more affordable areas for automation, right? That level 1, and then those processes around onboarding and your third-party risk management processes. Those are areas, for automation, but also they're really more affordable areas for automation as well, given the traction that you get out of being able to perform many of those processes in an automated fashion and not using labor for some of those processes that, quite frankly, with a human take a lot longer to do, and so therefore the costs sort of shoot up with them. Having these areas also automated and digitized reduce the risk of human error. And so that's where the operational efficiencies are really gained as well. Sorry, Leslie, were you going to say something?
No. All good.
So knowing that this is where respondents reported finding the most efficiencies is really something to highlight and make note of here. I think this is sort of a bit further point on here, Leslie. I don't know if you want to highlight any of the statistics and numbers on here.
Yeah, I think, when we initially started looking at this, it actually, I don't know why, but it did surprise me a little bit in terms of outsourcing firms leveraging other people. And then it became much more clear to me, digitizing and automating, using external vendors, using third parties. And I think third parties was what really kind of spoke to me. And that was just from a risk perspective, ceding your risk to somebody else, but automated solutions to perform the compliance process. Again, more of the same, but I think it's all the things that are relevant. It's more expensive to develop your own solutions. And I think people are wise to look at parties, vendor solutions whose core competency is this space. Certainly,
that's right.
We have engaged with customers who at a point in time who have looked at building their own solutions. It is costly, it is labor intensive to keep up with it. It is certainly an easier path. Oftentimes, I will not say that it is necessarily the least expensive path, but when you think about everything that goes on to list maintenance, ongoing monitoring, identity verification, it's hard to do that on your own. So again, just more of the same there.
A great opportunity to do a couple of things. One, go through the recommendations. I don't think we've gotten any questions in the chat, but this is a great opportunity for everyone to think about what questions you might have for us right now. Get them in the chat. So we've got a few minutes here toward the end to answer some of those that come up.
So in terms of recommendations, I don't think that there's anything on this, Cindy, that the audience would find shocking. I mean, it has been pretty consistent in terms of looking at solutions. I spoke to this earlier, this word that we use of holistic, but it is incredible that we've been using the terminology and we are seeing it become a reality. We're seeing people look at even more robust sanctions and screening systems. And I'll say this, I know our audience is primarily, and the results at least, speak to financial institutions. There's so much going on now outside of financial institutions, and we're seeing movement in the corporate space as well, where the guidance is really expanding to look very similarly to what financial institutions have established. So I think the compliance mindset in a global economy, in global commerce, has really taken place. Technology remains important. I would say you have to use it wisely. Not all suspicious activities, not all transactions, not all payments, not all behaviors are crimes. And as much as we talk about the downside, the negative end, the crime prevention, I often think we should focus a little bit more on the positives of what our tools and solutions do. And that is they help reduce friction for those of us who are doing the right thing, those customers who don't have issues, as much as they create friction through enhanced due diligence for criminals. Financial crime compliance teams need to continue to evaluate their data sources, how they're monitoring. When you look at how behavior changes, and our buying behaviors change, our patterns change, all of those things have to be evaluated. And again, software solutions, data solutions, whether it be AI, whether it be robotic process automation, all of those things factor into it. And ultimately, when you look at the regulatory impact, you have to have an infrastructure in place where you can pivot based on the immediacy of the regulatory environment right now. So, like I said, nothing earth-shattering there. I think it's always interesting to see this year-over-year progression and what it means. So, Erin, I'm going to pause there, Cindy, unless you have something else. I'd love to see if we have some questions, and then we can go from there. We do have a little bit of a survey question, and that is related to LexisNexis Risk Solutions. If you found this valuable today, as I stated, I know we have a diverse group on the phone. Certainly, this is focused on U.S. and Canada. We have EMEA, we have LATAM, we have APAC, their total cost of financial crime compliance as well. Happy to share that and happy to have a conversation as well around our solutions, whether it be a digital identity solution, a platform solution, all of those. Super fantastic. So, Erin?
Yeah, a lot of really good content, ladies. That was a lot. This is really good stuff. We do have a question here. Why is it cheaper and even better to use a third party than internal resources, which are supposed to know better the financial institution they're working in? Believe us.
So, Erin, if you could repeat that, you said, why is it cheaper and better to what?
To use a third party than internal resources, which are supposed to know better the financial institution they're working at. So why would it be cheaper to go outside versus internal?
Yeah, so let me just clarify that. It is not always cheaper. It can be. I think you have to consider your operational cost. So in that your overhead of standing up your software solution, the labor that it takes to keep up with lists, the timeliness of it. Do you have the right infrastructure to support it? Or are you willing to leverage a third party who is really focused on and equipped and has those resources to provide that solution to you? So again, just want to clarify, it's not that it is cheaper necessarily, but it can be cheaper. And you have to think too about where in the process are you adding your technology and what does it impact? Cindy, you might have some additional thoughts there, but that would just be my initial reaction.
Leslie would have said all of that. I might just add, you can gain economies of scale when you're using an outside vendor and you're using them for multiple aspects, for example, of data. So maybe multiple types of data that you need. And because we also have seen this mega trend of streamlining third-party providers. So that's not to say don't use them, but you can gain efficiencies, economies of scale, and lower costs when you use someone for multiple solutions or multiple data points.
Great. I have a question, ladies. So you talked, yeah, that was a good question. So you talked about geopolitical events, particularly geopolitical events when it comes to the sanctions against Russia and the Russian invasion of Ukraine. Are there any types of examples that you could provide our attendees about other geopolitical events that they can keep on their radars to know what to look for in the future when it comes to risk?
Yeah. So, Erin, this is a good one. I'm super passionate about right now because I think when you think about trade compliance and sanctions, I threw this out there. It was a gaffe on my part, but I do think that we have to think about what is going on right now with China and looking at the relations with China and Taiwan. I think the relationship between China and the U.S. as well is pretty impactful. And I think that that will continue. I think that if you're looking at the sanctions landscape, will really be felt if things escalate, if things progress, will really be felt widely.
And also China and its activities within Afghanistan as well, with the Belt Road Initiative and the exploitation of the minerals or natural resources that they are exploiting as well. And now the terrorist camps that have been identified publicly, at least I believe 10 of them have been discovered, regenerated inside Afghanistan. Another geopolitical event to put on your radar, everybody, on attendees. You heard from LexisNexis. All right, I do have one more, and then we have to wrap up. You've mentioned about technology and VPN/IP. Now, I'm a former investigator myself inside Bank of America as well as Western Union, and IP address was when I discovered that I had access to it, it changed the entire game. Can you explain why it's so important for compliance officers to know the IP address and to make sure that law enforcement gets that information?
Yeah, so I think that we've been conditioned for a really long time to think about physical address location. And again, you can be doing business with someone who is accessing information or who is, looking to move money, and they can be located in a sanctioned country, anything like that. And I think that there is a stronger regulatory desire. They know that criminals have looked to access information to make transfers, to mule, to smurf, to do all those things to conceal who they are from remote locations. And that's why you're seeing enforcement actions right now around IP addresses. Cindy, anything additional to add there?
IP address is an identification factor, right? It's a way of identifying a person, and because an IP digitally, and because an IP address can be masked through a Tor or through a VPN. However, it's a piece of data you can use to identify a person, to therefore identify risk. Knowing it can be masked, this is why it's so important to know it, and this is why it's so important to have a solution in place that can poke through the VPN or the Tor browser and make a connection to that IP address from this device or IP address from a different device, and be able to make the parallels and say these are actually the same person, trying to mask who they are, trying to act like they're the same person, but we can tell from the IP address, trying to act like they're not the same person, but we can tell from the IP address they are, and they're one that's committed a financial fraud, either with our business or elsewhere to another business, because we've got the technology in play to make those connections. When you're not looking at that, you're just opening up your business for risk.
And two, I just want to end on this one copy, kind of piggyback on what you just said. It's also, remember attendees, it's not our onus. Its notice isn't on us to tell law enforcement where it went after that. As long as you capture that information, like what you just said, Cindy, capture the information and show them that they're trying to mask. That is hugely helpful for regulators and enforcement to say, oh, that's part of their MO. I see that MO and now I can work with it. If you think that it's something that's not really all that important, guess what? It could be very important to them. So just gather the information and then report it as you see it. You don't need to go any further. So that's really good. Thank you so much to LexisNexis for bringing all this information to us. Thank you to Cindy and to Leslie. That was a lot of really good information. If you liked this, Yeah, absolutely. Loved having you. If you liked this webinar and you're not a member, please be sure to become a member, and you can get training and tools, all sorts of financial crime activities that are going on, trends. You can have access to so many things. We have a fantastic director of content who writes our FinCrime Journal, who's amazing. So you'll have all sorts of emerging trends and risk-based training coming your way. If you're not part of a chapter, go ahead and become a part of a chapter wherever you are. And if you have looked into our website and you see there isn't a chapter near you, write into the support email site and let us know. Let us know you want to become a chapter, that you want to start one. We would definitely love to hear from you. And last and not final though, join the next generation of financial crime fighters. Go ahead and get certified. It'll help you with your career down the road. Employers who are now looking more for not just the CAMs, but also now us, CFCS. They'll take one of the two, or CFE as well, but CFCS is the best one for a holistic approach on financial crime typologies that are occurring today. Speaking of the holistic approach, we are broadening our FinCrime expertise, which is your FinCrime expertise, with the brand new, as of this week, rolled out ACFCS Crypto Compliance Specialization. Thank you to Cindy and Leslie who talked about crypto. If you want to learn more about it and you have some background as a financial crime investigator or compliance officer or risk officer inside a firm, you can learn more on our self-study with comprehensive resources. It's interactive. Take your time. It takes, if you want 6 months or so to take it, take 6 months. If you want to do 1 month, go ahead and take it. 50 questions. It's a computer-based examination, and you have your compliance specialization in crypto you can take to your employer and go crazy with your career. Thank you so much. We really appreciate everyone being here and for asking the questions that you asked. And to keep up the good fight, ladies.